Welcome to Conscious Crypto. Leaving money on the table. One of the toughest experiences to go through as a trader, hands down. Let's say you average 5K on a winning trade. How would you feel if that trade could have made you 50K? If you held it for one more hour or the rest of the day? If you're a true trader or investor, you've experienced this and it fucking hurts. But at the end of the video, I'll speak to the concept in psychology that remedies this destructive emotion and marry that concept with wisdom from Mark Douglas. Simplicity is everything, especially in trading. It's not about having 12 indicators to provide signals or 20 strategies to make money, but instead simplifying every aspect of trading to get to the point, eliminating human error, which leads to making money consistently. So here are the 4 root causes of every trading mistake. Number 1, fear of missing out. Ooh, that's a big boy. Number 2, fear of losing money. That one's obvious. Number 3, fear of being wrong. And of course, fear of leaving money on the table. Now, my worst fear is leaving money on the table. This just happened to me in a trade on SOL and XRP this week. Now, here are the trades that I took. So on a macro level, SOL had shown topping behavior, right? Boom, big move, in formation, double top, as other people call it, level 3. And then it started this downtrend, right? Then it broke this line of support that went way, way back. And once it broke this line of support, multiple tests, it then retested, rejected, and then we got another retest rejection. So I didn't even make that trade. In fact, I got in over here once we broke structure and we were essentially playing with a lower low. I saw this move up into the 50 EMA, a rejection at the CPR volatility, basically a point of interest in the market. Some people might call that supply demand. And I saw it clear as day, and I was like, okay, based on my strategy, there's 3 levels here. Now we have 1 level up here, box it out, boom. All right, so we have 1 level here, another level here, and then again, another level here. So the market and the way I see it and the setups I look for is all about 3s, right? Moves of 3. 3 hits of divergence tells me good time to enter. 3 hits to the high, something like that. Good time to enter. 3 levels of price movement or 3 pushes is a sign to me that the market is complete, sellers or buyers are exhausted, and the market may turn. Or in this case, continue for that 3rd level. Now, what's really interesting here is I took the trade from like great entry, and due to some financial hardship, when I started to see 4-figure profit, I took profit right around here, knowing it hadn't even broken this structure, knowing based on my strategy and what I see in the market, what I look for, that there was another leg down, at least to here. So my first mistake was essentially taking profit. Oh, this hurts. All right, right here. You know, like it was a better than a 1-2. I felt great about my entry. I had about a 3-1, and I knew there was another level. So I should have at least captured to here or likely here, which is an extension of the volatility based on the average historical returns. So again, there's a good likelihood that it comes at least to here. So I should have had like an 8 R multiple, 11% move captured, and honestly, I could come to terms with that a bit easier. That's a great trade. The market gave me everything. I took it based on my strategy. Unfortunately, taking it here, it was like the next 2 hours, it just continued to move. And I usually swing trade. So holding trades more than a day is normal for me. And sometimes that leaves me at a break even, making no profit and giving up 500 points or good profit. And that is okay with me. That is how I trade. I go for big R multiples. I go for less effort, good entries, less trades, all of that. And I let my trades run. Okay. Now, they say you can never go broke taking profit. But again, based on my strategy, I can go broke taking profit because the trades I take are all about a bigger risk to reward ratio. Now, I hope everyone understands the math on that, because it's not just a hit rate. It's not a 90% hit rate strategy that gets you to be a pro trader. It could be a 30% win rate, meaning you're losing 70% of the time, yet you're making 10-to-1 trades, or an average of like a 6-to-1 R multiple. So anyways, other videos, I've covered that. The market kept moving and then again touched this average historical returns support. And that is definitely a place where I would be happy taking profit. So I took it extremely early, and what could have been a huge trade for me at a crucial time for me in my trading career and financial career ended up being very painful. So though I won, I still felt the pain of a loss. And that's what's wild about trading. And that's what I'm speaking to today. Now, I had a similar trade in on XRP right here. And I got in on this first push up. I saw all the resistance, and it goes historical resistance. I got my CPR line coming across, and it's been pushing off of this as a, again, you could call it a supply zone in the SMC concepts. Smart money concepts. I said concepts twice technically by using the abbreviation and then saying concept anyways. But yeah, I took profit at like right here instead of letting this information play out and pushing it through. So I didn't honor my strategy in this one. I didn't accept my risk and allow for the trade to play in my favor. I did it again here. I didn't wait for this third level, and I was waiting for it, and the market just outweighted me. And as we know, the market is simply a place where money transfers from the inpatient to the patient. So this was still a great trade, and I hurt less on this one, but this one hurt because it was following up right after. And I took about 50% of this vector candle. I was like, okay, it's unlikely to recover the entirety of this vector candle. I entered at the close of it. I saw this big push and then this move back down, and I know that activity. It's a stop hunt high and then a move for a reversal. So again, I got boom right around down here. I thought that was my third level maybe. I was like, this doesn't seem right. It didn't really break structure, but it could be. XRP has been a huge uptrend. It's super popular. It's in the news. And I talked myself out of it. So still, a 2-to-1 and good money, 4-figure. But again, what hurt so much was that I knew based on my strategy told me, continue to hold this. The trade hasn't reached maturity. It hadn't reached the average of 2 days of movement. And 2.5, 2.4 to be exact. And that is why I closed early, and that's a bummer. So again, this was a tough series of trades. So my worst fear is leaving money on the table. Well, why is it so threatening? Well, why is it so threatening? Because the market gave me exactly what I wanted, yet I couldn't just sit on my hands and let it give it to me. Mark Douglas taught me this on page 55. Did you ever wonder why leaving money on the table is often more painful than taking a loss? When we lose, there are a number of ways in which we can shift the blame to the market and not accept responsibility. But when we leave money on the table, we can't blame the market. The market didn't do anything but give us exactly what we wanted. But for whatever reason, we weren't capable of acting on the opportunity appropriately. In other words, there's no way to rationalize the pain away. The solution is taking responsibility. The purest form of that is honoring my strategy. Perhaps the risk to reward ratio employed on this strategy was hit, and that's a job well done. Or respect the factors that went into closing my trade. Like Mark Douglas's famous Q&A elucidates, how could we know that the market was going to have the biggest move of the month or year?
You said you had 5 contracts?
No, 2.
Two.
Just
Why
2.
don't you just take one off the table, let the other one run for another day?
First of all, Jerry, you're assuming that I knew that this was going to happen.
We can't truly know. Now, I've learned to normalize loss, but when I get caught up in a finite mindset, I place unrealistic expectations on my trades, as if this is the only setup I'll see all year, as if this is the day to make my money, and tomorrow doesn't exist. Unrealistic expectations come from a finite mindset. Now, hold that in your head, because I'll be circling back. But first, I want to introduce a concept common in psychology called outcome independence. This non-attachment to outcome is a critical flow trigger. Essentially, this is a mindset that encourages high performance that's rooted in the deep now. There's no concern about winning and losing because that's all future leaning. According to the science of flow, the deep now is where we are selfless, effortless, timeless, and have access to rich data acquisition. We actually experience hypofrontality, which is where our prefrontal cortex, the part of our brain that separates us from the rest of the mammalian world, it downregulates. It becomes less active. So this higher level cognitive center is no longer primarily directing our decisions. That's fascinating. I see this in all sorts of pro athletes. Here's a quick clip of one of the most elusive and greatest Muay Thai kickboxers in all the land, Lerd Zilla.
No one else has been able to do. Lerd Zilla doesn't actually care about winning or losing. He just wants to enjoy himself. In psychology, this is called being outcome independent.
When I fight, I have fun with the game. I don't think about losing or winning.
Ironically, research shows that people are able to perform the best when they are outcome independent. Science has shown that people with this mindset are able easily to enter high states of flow. And that's exactly what Lerd Zilla is 100% of the time. He is like water. He flows.
When I fight, I have fun with the game. I don't think about losing or winning. That's the deep now. All of which is to say that outcome independence puts me in an optimal performance state to execute my trades. So let's look at outcome independence relative to Mark Douglas's approach on expectations. On page 113, Mark Douglas writes, expectations are mental representations of what some future moment will look, sound, taste, smell, or feel like. Expectations come from what we know. Now, the problem right there is that, again, it's not present. It's leaning into the future based on what we know from the past. And so everything we do in life is based on drawing from the past and the data that we have there and the outcomes specifically of what we've experienced, and trying to overlay that onto the present moment in order to make the decision that leads to the most pleasure or the less pain. But all of that actually can take us out of flow state, which is through the doorway of the deep now. Now, I don't actually think we can eliminate expectations. But through my experience with a 10-day silent meditation retreat, I know we can detach from them to essentially become outcome independent. Okay, the debrief. So here's how I got to the other side of this painstaking debacle without making another trading error, like revenge trading or putting on too much size in my next trade. Number one, I decided not to trade at all for 2 days. 2, I looked only for my tried and true A+ setups, and luckily I got none in that time. Number 3, I got deeper into my meditation practice to clear this by just allowing the well of grief to rise and fall away. 4, I socialized, worked out, cold plunged, sauna'd, took care of myself. Number 5, most importantly, I reminded myself I'm an infinite player in an infinite game, meaning I will see that opportunity again at some point in my trading career, and I'll be better prepared for it. And the actual goal is to be around when it happens again. If I go on tilt, I could blow my resources, which steals my chance to take that trade again. In essence, I have to develop outcome independence, meaning my trading is about developing myself and my skills. And this allows the results, like making money, to follow. Mark D, page 133. To whatever degree you lack confidence, you will experience fear. The irony is you will be afraid of random, inconsistent results without realizing that your random, inconsistent approach is creating exactly what you are afraid of. This is all to say that we must create confidence because the market is full of uncertainty. Backtesting and forward testing always renews my confidence that I am a consistently successful trader. This confidence also creates the potential for flow state, where trading truly becomes simple and enjoyable. Because confidence is born of competence, and competence breeds more confidence. Therefore, marry that understanding with that of the infinite mindset, and I realized I simply need to employ my take profit strategy, ensuring the confluence is there, like I would when entering a trade in the first place. And perhaps even looking at the value of partial profit taking. These are just self-reflections from a true trader in the struggle, trying to find his way for the sake of his future family. Respect to all the underdogs. Like, subscribe, diddle the bell. Now,
let's go get this money.
peace.